What's up, guys? My name is Robbie Greenfield, and I'm founder of Umoja. And today we are going to discuss how to place a synth and quickly what a synth is. Now, as you know, Umoja is a next generation protocol for liquid staking tokens, but one of our first products was actually a structured product specifically to make options easier to make money from. And these are called synths or synthetic options. You can find synthetic options on the website by going to UTools in the top left-hand corner and dropping down to synth. Now, a very quick TLDR on synths. Normal options are quite risky to use. You typically have to put some money down, and that money is to make a bet as to whether the price of something is going to go up or down. If you're betting that the price is going up, it's called a call option. And if you're betting on the price going down, it is called a put option. Now, what typically makes options a little bit more risky is that if you want to bet to make more money, then you're going to have to take leverage or borrow money from the exchange to make your bet bigger. You can do up to 100x or even beyond that on certain exchanges like Bybit and Binance. But the catch is that if the price goes into the reverse direction of your bet, say you bet that Bitcoin is going to go up and it's actually going down, you can quickly lose all of your collateral. And this happens automatically, and it's a process called liquidation. So it's effectively a very high risk and high reward game. If you bet that the price is going to up or down and you want more money, then you have to take leverage. But the more leverage that you take, the higher the risk that all of your money is completely taken away by liquidation. So how do we solve this, and how do we create a user experience that, one, is easier for people to learn how to trade these things, and then two, also gives them a bit of pause and relief when it comes to not being liquidated, but also when it comes to maximizing the effectiveness of their money? And that's effectively what a synthetic option is. It's actually an NFT representing a strategy that replicates a crypto option using algorithmic perpetual futures trading. You don't need to know about all the latter. If you do want to learn, you can check our Git book, but it all means to say that synthetic options provide 10x leverage, meaning that you can make a bet 10 times the amount that you put down, and zero liquidation, meaning that you can let this bet exist for long periods of time without having all of your money taken away immediately. Even better, you have more flexibility as to how long your bet is or the expiry, and also at which price your bet is, which is called the strike. Now, this is really important because on traditional exchanges, you cannot do this. You have a set standardized strikes and a set standardized expiries, limiting your option as to the types of bets that you can make. And so this limits your options even further than what they already are. But let's stop talking about what synthetic options are and just get into actually using them. So we're here on the synthetic options page. Of course, if you need to learn more, you can see a step-by-step guide or view this tutorial that we are literally recording right now. And let's go ahead and make a mock bet. So I'm going to do a synthetic call. Remember, this means that I am betting that the price is going up. And of course, if you know me, I'm very bullish on Bitcoin. We're currently in post-Bitcoin halving cycle mode, and around the time at which we should see the Bitcoin bull run start. So of course, I'm going to make my bet that Bitcoin is going to increase in value. And let's say I want to bet 10 Bitcoin. Now, this is the first thing that you need to take note. If I want to bet 10 Bitcoin, then I only need to put 1 Bitcoin amount of money into my position, because again, I get 10x. So this is where a huge amount of magic and value is unlocked. I get to make a much bigger bet than I could ever have or have money for. Now, of course, the next is my expiry. When do I want my bet to expire? Well, I know from my technical analysis that the bear market for Bitcoin is likely going to start around October of next year. And so I'm actually creating a very long-term bet, which is going to give me more flexibility in terms of making money, but also might be a little bit more expensive to execute, which we'll see a little bit later. The last thing that I need to bet on is the actual price. Right now, the current price of Bitcoin is $60,948, $2.90. Now, if I'm betting that the price is going to go up, I can't bet equal to or below this amount. So let's just bet $61,000. Now, as we finish this, we're going to understand what our total down payment is. Now, this is not the cost, it's effectively your starting balance plus the fee that you need to pay. So let's check out the details as to what this actual amount is. So again, we have our details that we're betting 10 Bitcoin, that the price of Bitcoin is going to go equal to or above $61,000, and our bet lasts until October 31st, 2025. Now, the collateral that we need to put down to enable the trading strategy to start acting like a call option is $60,000, which is about 10% of the total notional amount that we're actually betting. And then, of course, there is around a $3,000 Umoja fee. This fee is half the spread of Deribit. It is very, very small, and it goes to protecting the protocol and goes into the insurance fund. Now, once we've gotten all of that set, we can close the details and place our synth. In doing so, we see a confirmation modal, just confirming the exact same details that we went over. Now, I'm not going to confirm this synth because I want to show you one that's already opened, and I've already had a few bets that I've placed myself and don't need to place this necessarily. So we're going to exit out of this. But what you'll notice is that all of your potential bets that you make are saved in draft form if you ever want to come back to them. And this is what you'll find in the dashboard. Now, the dashboard has a ton of things. All of the different positions that are currently open, or the ones that you currently have drafts in, like the one that we just made, and also all of your tractions, regardless of what you've done, like your top-ups, your withdrawals to withdraw profit from your synths, etc. So this is effectively your portfolio overview dashboard for all the synths. We're going to go to synths, and we can see the synth that we made. All of its details will pop up, but of course, this is a draft synth, so nothing is quite there yet. You won't see any graph or anything else. So I want to take you to an active synth just to show you things that you would see. So let's check out this synthetic call for AVAX, for example. Let's wait a little bit until we see some data show up. There we go. And so this is something that you would effectively see. Over time, you'll start to see the performance of your synth, meaning how much money you're making versus the collateral that is required to maintain your position, which we'll get into. But first, let's talk about what we're actually seeing here. So the first thing we're seeing is your total notional. This is just the size of your bet. The size of this bet is approximately $50,000. The next thing is your synthetic call balance. Now, remember that collateral that we were asked for earlier, that was around $60,000? That collateral is effectively your trading balance, and the trading algorithm is working off of that balance to replicate the bet that you're making. So effectively, this is your current balance. And we know that this is a pretty good balance because it is more than 10% of your notional, which shows that things are going pretty well and that your bet is probably making money. We can confirm that your bet is making money by looking at the lifetime profit and loss. We've already made $2,315.88 from this position. So we're doing pretty damn well, which is great. But of course, these things can change if the price goes into the opposite direction. And then of course, under that, we see the overall performance. Now, the notional tab right here is very, very, very important to understand. What it's showing us right now is that our notional bet, right, the bet that we're making is worth 2,040 AVAX. And that currently it is 2,040 AVAX, meaning that we have maintained the position that we initially created. Now, you may be asking, well, what does that even mean? Of course we have, but this is something that can change. If your collateral ratio, meaning that the amount that your balance is versus the notional bet that you're making, if that ratio drops equal to or below 5%, then instead of getting liquidated and having all of your money taken, like on a centralized exchange, what will happen is that your bet will be cut in half. So now, instead of having 10x leverage, you will only have 5x leverage, and the current will be 1,020 AVAX. This will continue to happen if you don't top up your collateral, meaning putting more money into your position if your position is not doing well, but you want to maintain the leverage that you have. So for example, we bet right here that AVAX was going to go over $25. And let's say, just for the sake of the argument, that AVAX was at $23 and it was going down even more. And my collateral ratio was at 5.1%. If I don't put more money into this synth, then I'm not going to be able to maintain the size of my bet. And I want that to be high because for my strategy to work, I want to make as much money as possible if I'm right. And so having a higher bet is going to enable that. So if I decide to ignore this, then my money isn't taken away from me, but the size of my bet gets much lower. In fact, it halves. And I keep the balance that I had, and hopefully, things change and the price gets better and I make back the money that I lost. But in this case, you are losing money and you need to be very aware from that. Now, I can do one other thing. I can just close out the synth altogether. If you close out the synth, then you will get whatever is in your remaining balance, and effectively your position is done. Or I can ride it out and hopefully things will get better, and again, I will make my money back. Now, another really, really cool feature that exists on Umoja and literally nowhere else in the world, guys, I'm serious, is being able to withdraw your profits. Now, as you can see, I have $982 available to withdraw. Now, what does that mean? That means that if I want to take some of my profits that I've already made, I can do that right now. And in fact, you can see that I've already taken $1,000 out of this, which means that I'm actively maintaining my bet while also taking out money as my bet continues to do well and, continues to be right. You do this by clicking the withdraw button, and then you can enter the amount that you want. Of course, under the maximum amount of money that you have to withdraw. Let's do $300. Now, I'm strategically not doing this right now because I've personally found that it is good to leave a little bit of profit, maybe $1,000 or so, in your balance just in case you experience bad times. Sometimes it's better to have a collateral ratio of above 10% because in the long term that you're betting, which again, this is for October 31st, that you're going to make much more money than in the short term and being too greedy of taking away capital from your balance that could otherwise protect you in the future. So effectively, that is it. I know this is a lot to discover, uncover, and learn, but of course, we're going to create more and more educational resources to do this, but that should show you at least the basics. If you are confused about anything, feel free to rewind this, look back for it, or join our Telegram or our Discord and ask me directly, hey, Robbie, what is your synth strategy and how can I learn better how to manage this amazing tool? Now, I would have to say that our upcoming smart coins are going to be 1,000 times easier to understand and use, but if you're comfortable with trading or want to learn how to trade, then using synthetic options is an amazing tool to replicate options exposure without having to trade them at all. Until next time, peace.